I got my mind on my money and my money on my mind. A great philosopher once said, I got my mind on my money and my money on my mind. It wasn't Aristotle. It wasn't Pluto. It was Snoop Doggy Dog. What's going on, guys? My name is Minh with What's a Mortgage. Welcome to our channel. The goal of our channel is to educate, empower, and to connect you with the right mortgage. And tonight, we are going to give you the 5 easy steps on how to shop for a mortgage. Rates have changed drastically. If you're watching this February 2021, rates are rising, and as they rise, we want to save as much money as we can, and we want to look for the best deal out there. And the way to do it is to follow these 5 easy steps. If it's your first time tuning into What's a Mortgage, welcome, welcome, welcome. Do me a huge favor. Hit the notification or subscribe button so you're notified every time we go live or post new content. We go live Mondays and Wednesdays on Facebook and YouTube at 9 o'clock, and we post our content Sunday mornings and Wednesday mornings at 9 a.m. All right. Also, guys, this is an interactive channel, which means ask a lot of questions. If you have any questions regarding home ownership and you want answers, ask. I don't care if you're buying tomorrow, next week, a year later, 5 years later. But if you have questions, please ask. All right, guys, welcome. Hopefully, you're having a great night. So, you're out there. It's already hard enough to save your money for your down payment. It's also hard enough to save your closing costs. $3,000 can make a big difference. That could be new carpet, new paint. Things can happen after you buy your home. And the last thing you want is to be short money. We're going to show you how to save money by shopping for the right deal. Every Friday, I do something called a loan estimate challenge. Sometimes people go with us, sometimes they don't. But we are able to beat majority of the deals. Sometimes people are scared to change lenders because they don't want their credit ran, which I get. But if they don't get that second opinion or they feel like they are not able to shop their loan, they're missing out on a couple $1,000s. There was an incident where we saved somebody $4,000 a year in monthly payments. Some people were saving them $6,000, $3,000. Tonight, I'm going to show you. Doesn't matter if you use me, doesn't matter if you use someone else, just get a second opinion. And I'm going to show you how to do it the right way without messing up your credit. Okay? So let's start. Here are the 5 steps. Step 1 of shopping for your mortgage is you need to run your credit. You can't go around shopping a mortgage assuming your credit score, right? You got your credit card app on your phone, Credit Karma, right? As soon as you apply for credit, all of a sudden everyone else wants to give you credit. And they're telling you this great credit score, which doesn't exist. So you're out there believing you have a score, and then you wait till you find the home and you want to get your approval, and you only have one lender run your credit, and you don't have enough time to shop because you want a specific home, and now you're stuck with a bad deal with your home, right? You're stuck with a payment you don't love, closing costs that you might not know you could have saved money on, right? So definitely run your credit ahead of time. Your credit report is good for 90 to 120 days. When you run credit, a mortgage lender must run your credit. When mortgage lenders run your credit, Experian, TransUnion, and Equifax, they use the credit score rating system of FICO score 2, 4, and 5 to grade your credit. When you're using Credit Karma, they use Vantage Score 8. When you're using your credit card credit score, they use FICO score 8, right? So definitely make sure you're using the correct credit score rating, even though it's Experian, even though it's Equifax and TransUnion. Make sure you're using the right credit score guide, right, when they're running your credit. So if you're not applying for a mortgage, they're going to probably run it under their credit score, right? So make sure you have a mortgage lender run your credit. I recommend you run it, 30 days before you buy, 60 days before you buy, just in case you could improve your credit score to get the best deal, right? So when you run your credit, You have time to fix your credit, and you have time to shop it. Your credit report is good for 90 to 120 days. Only one lender has to run it. And when they give you a credit score, you'll get 3 scores: one from Experian, one from Equifax, and one from TransUnion. When you get each score, they will use your middle score as a score they're going to grade your credit off of. If there's multiple people on the loan, they're going to take everybody's middle score and they pick whoever has the lowest middle score. That's who they're going to grade the loan off. Okay. So if you have a cosigner and your cosigner doesn't have great credit, but you need them to help you qualify, sometimes you'll qualify, but with a worse payment because their credit's not great. So if you're adding a cosigner or whoever else is going to be on the loan, make sure you're not the one bringing down the credit profile. Okay. So step one, run your credit. One lender must run it. Will they give you a credit report? Some lenders will, some lenders don't, but it's okay. When you fill out disclosures and you run credit, typically if you're using a bigger company, right, they will tell you your credit score when you apply. All you need is your middle score. Once you have your middle score, you can shop it. You don't need the report. You just need a middle score. Typically, if a lender is going to run your credit, they'll probably do your approval as well. So you know you have an approval, you have a DU approval, desktop underwriting approval, and you have your credit score. That's all you need to shop, except step number 2, generate your profile. Right? What do I mean by generate your profile? If you want to compare apples to apples with different lenders, you can't take an FHA and compare conventional. You can't take a $600,000 purchase compared to a $400,000 purchase. You can't take a down payment assistance compared to a conventional, right? Also, who could compare VA? VAs are going to smoke out all the other programs, right? No MI, low interest rates. If you want to compare apples to apple, generate your profile. So once you generate your profile, you want to put your middle credit score in there, the purchase price in there, the appraised value on refinancing, the loan amount. Is it a purchase or refinance? Is it a streamline, right? Cash out, rate and term. Is it owner occupied, investment home, or second home, right? Is it a single family home, duplex, triplex, or fourplex, right? Or a manufactured home, right? And if the first lender gave you interest rate and closing costs already, is it on an FHA loan, conventional loan, VA, or USDA? Okay. So you want to generate your profile. If you want a copy of this, you can go to what'samortgage.com and download our ultimate mortgage guide, right? Once you download our guide, in our book, there's tons of other tips in there for you, but this profile page is in there. So when you're shopping for a loan, if you have all this information, you can get rates from other lenders and closing costs. Why is it important that you know this information up front? Because it's better to shop all lenders on the same day. We'll explain later. Okay. So step 1, run that credit, right? One lender must run it. Step 2, generate your profile. Once you generate your profile, now you can go out and shop, right? And of course, your first lender has already given you your loan estimate, right? Which has your interest rate, your payment, your closing costs. The next step, step 3, you want to call 2 or 3 different lenders. You want to call 2 or 3 different lenders asking for a loan estimate. Some lenders don't provide loan estimate. They will provide a fee worksheet, which is fine, right? Make sure they provide you some sort of fee sheet, all right? Once you get the fee sheet, now, right? Once you get the fee sheet, now, step 4, you want to compare them, right? You want to compare the rate, the lender fees. When you're looking at the loan estimate or fee, loan estimate is easy. You want to look at page 2, section A, which are lender fees, which are negotiable. Section B, which are lenders miscellaneous, which are not controllable. Those are mandatory, right? The miscellaneous fees are third-party fees from other vendors that are charging the lender, and all that lenders do is passing it on to you. What the lender can't do is upcharge those fees. So if the credit report is $45 from the credit bureaus, they can only charge you $45. If your appraisal is $600, they can only charge you $600. They can't charge you $650 or $700. Okay? So when you're shopping for your loan, you want to know section A, section B, and section J. Once you have those things, now you can compare, right? Let's go to step 2, slide 3. So once you have those, the interest rate, the principal and interest, the mortgage insurance. I got beat out this week, right? I thought I for sure wasn't going to lose. I had a loan. We matched the other lender, but some way the other lender was able to get cheaper PMI. I don't think it's possible. I think they're just bait and switching them because it was super low. But if they did beat me, they beat me straight up, right? Rates were the same, principal and interest were the same. But on conventional loans, not all lenders have the same conventional PMI. Okay, so when you're shopping for a conventional loan and you're not putting 20% down, you want to pay attention to the PMI. It makes a big difference. Our payment was off, I think, by 120 bucks. Okay, we did lose for once. I'll tell you, not for once. So there are times we do lose on the loan estimate challenge, right? And that day, someone else was the better man or woman. But I know for sure they weren't able to get that deal because the loan was not locked. And this was yesterday, the day before when rates skyrocketed. All right. So, but you want to compare the interest rate, the principal and interest payment, the mortgage insurance, right? And also page 2, section A, section B, and section J, right? So when you have your profile, I even put down on there for you what to compare. All right. So step 1, get that credit ran. One lender's going to run your credit. It's good for 90 to 120 days. Step 2, generate that profile so you know what you're using to shop your loan. Right? Step 3, you call 2 or 3 other lenders and you ask them for a loan estimate. If they can't provide the loan estimate for you, it's a little tricky, right? They might provide a fee worksheet. You want to look there for lender fees, right? Processing, underwriting, discount point, origination, right? Appraisal, application. If you do have a fee worksheet and you don't know how to read it, do me a favor. Send it to us. We'll read it for you. We'll help you translate it, right? You can call us at any time or send us a copy of your fee worksheet. Send us a copy of your loan estimate. We can help you read it and beat it, right? info@whatsamortgage.com, right? So after you have 2-3 lenders send you either a loan estimate or a fee worksheet, the next step is to compare. You want to look for underwriting fee, processing fee. You want to look for appraisal, origination, discount, application, right? Typically, you should be able to decipher the fees by reading it out loud. But if you do have challenges, like I said, you can get a hold of us. Now, step 5. This is what you do. You can either go with the lender with the best deal, right? That's pretty obvious. But let's say they have the best deal, but you don't mesh with that person, right? Let's say that person annoys you or you don't feel confident they know loans so well, right? Typically, some places they have best rates. The loan officer is not the greatest because the rate sells itself, okay? But let's say you want that rate, but you don't want you don't want that loan officer. Take the best deal and go to the loan officer that you like the most, okay? Go to the person you like the most. Hey, here is the best loan estimate. I like you. If you can match this, I'm yours. Or close to it, I'm yours, right? That would be the second step. If you don't like the loan officer with the best deal, go with the one you like the most, bring them that loan estimate. But what happens if they run your credit and your credit score drops? Oh no, I don't want to run my credit. My credit score drops. If they run the credit and the credit score drops, just take your loan estimate, go back to the original lender who ran your credit, because your credit's good for 90, 120 days. Tell them, Bugaboo, this is the best loan estimate. I need you to match it, and I'm all yours. And just have them match it. And typically, they will or come close to it, right? So that right there is the 5 steps on how to get the best deal. Number 1, one lender must run your credit. You cannot avoid that, okay? It's good for 90 to 120 days. Number 2, generate your profile. You want to make sure you have something so you can compare, okay? And then step number 3, call 2 or 3 lenders. Have them all send you loan estimates, right? Or fee worksheets. Step number 4, you want to compare, right? Who's got the best deal, right? Who's got the best deal on the block, right? Look at the rate, the principal and interest on conventional, and you're not putting 20% down. Make sure you look for that PMI, okay? And then page 2, section A is the loan the lender's lender fees, which are negotiable. Just let you know. Don't tell them I told you, right? Section B, even those you can't shop those, every lender has a different page 2, section B, right? Might be off by a couple $100. And then section J, the lender credit, right? Once you have all that information down, step 5, you pick the one with the best deal. That's option number 1. Option number 2, take the best deal, bring it to the person that you actually like the most and just have them match it. But if they run your credit, or the person with the best deal ran your credit and the credit's not dropped, take the best deal back to your original loan officer and say, Bugaboo, I'm all yours. You just need to match this loan estimate. Now, credit's protected. You got the best deal on the block. Now you can enter home ownership. I'm telling you, I talk to people daily, and I'm telling you, I see so many loan estimates where people are missing out on thousands of dollars. Do they all go with me? No, that's just being honest with you. The reason why a lot of them don't go with me, they're too afraid for their FICO to drop. They'll take my deal, breaks my heart a little, and they'll take it back to their lender because they're afraid their credit's going to drop. Or they just waited too late and they're in escrow and they're going to lose their deposit, right? So make sure, right, you give yourself time to breathe. Because, I'm a likable guy. It's hard for someone not to like me. I'm kidding, right? But when people bring it to me, sometimes they're too late and they can't switch, right? So don't become too late. You can't switch. And the lender knows that. And because they know that, they're not going to back off the fees, right? Give yourself a window to breathe. That's why I tell you, love the payment before you love the house. Get approved. Don't fall in love with the house and then go get approved. Now you have a house, which is hard to get your offer accepted the first time, but you're stuck with some boo-boo payment if you get the house and some boo-boo closing costs when you could have used that extra couple $1,000, right, to pay for new carpet, pay for new paint, maybe for a new driveway, maybe for a new roof. Maybe you need to hold on that money for an emergency. Maybe use that money to pay down some debt to lower your debt to income ratio, which will make the mortgage payment a lot more it will make it a lot easier for you, right? Because you lowered your monthly debt. So that right there is the 5 steps to shopping for your mortgage. And here's my bonus tip for you, okay? When you're calling lenders, you want to check during the weekday before 3 p.m., before the stock market shuts down, right? Call your lenders all on the same day is the best. That's why you want to have your profile in front of you. Why is that? Because you want everybody's rates that day so you can compare it. Yesterday, though, there was four rate hikes. So even if you did that, there is chance you might miss out on the best deal. Yes, there are times that happens, but not all the time, but it does happen, right? And not all lenders are the same, right? Today, we had a borrower, right? They're wondering why someone reached out to me. Is this one lender closing costs more than another lender? It was a jumbo loan. A lot of the smaller companies, they don't specialize in jumbos. So when you're trying to compete with the Loan Depot's guarantee rate, trying to compete with US Bank or Bank of America or Union Bank of California, of course, their fees on jumbo loans are going to beat a small company. Same thing with a small company, maybe their FHA will beat a big bank because the bank doesn't want to take that risk. So don't just take one deal like, oh, this is a good deal because they're a big bank. I know cousin Jimmy works there, right? Not all banks are treated the same. Some banks have their own specialty, and in their specialty, they got smoking rates. But the loans that aren't their specialty, they might not saying that they don't, they might not have the best rate. Hopefully that helps you out. That's one tip. Shop everybody the same day. Don't think that, because you're with such and such credit union, it's got the best deal on the block. It doesn't, okay? Shop for the best deal. Use our strategy. Save yourself that money, and you can take me to Sizzler. All right, guys, let's get into it. Guys, if you have questions regarding home ownership, definitely bring it on and ask. Jane P from YouTube. Can I put 10% down on conventional on a duplex owner occupied? The answer is no, Jane. You have to put at least 15% down if you want to buy a duplex owner occupied conventional. If you want, Jane, download our conventional guide. In our conventional guide, we tell you what you need to put down on a Fannie Mae or Freddie Mac on a duplex. Hopefully it helps you out. Mauricio Samoa. I got my credit ran today. I'm concerned if another lender runs my credit, what will happen? I understand. So take your credit score, Mauricio, and then take that score and shop it with other lenders, right? If you at least have all these other lenders send you loan estimates. If the other lender who you want to go with, if your FICO drops, just take your best deal, go back to your original loan officer, and typically they'll match that deal. Hopefully that helps you out. Juan Menace, can you get approved for a home if you're on a payment plan with the IRS? The answer is yes. Whatever the monthly payment is, Juan, they're going to add it to your debt to income ratio. If you're going with an FHA loan, they're going to want proof of 3 payments before they allow you to qualify for home ownership. You got to add that monthly payment to your debt to income ratio. If you're going conventional, they don't need to see proof of payment. They just want to see the payment letter. If they see the payment letter, they're going to take that payment, add it to your DTI. But you can buy if you owe money to the IRS. Hopefully that helps you out. Dan DeLeon, how do you find out what the property taxes will be when buying a house? This is how you do it. You can call your county tax assessor, tell them the city that you're looking to buy in. They will give you the city tax rate. Take the tax rate, times it by the purchase price, divide it by 12. That will give you your monthly tax payment. Hopefully that helps you out. Zach Zundi, how much should origination be with down payment assistance? If you're buying a home with down payment assistance, they should range between 1.5% to 2%. 2% beyond on the high end. Zach, you want to work with the bigger companies that are charging 1.5. The Loan Depot, the Guaranteed Rate, the New American Fundings, a lot of the bigger companies and the banks, they're doing 1.5% origination on down payment assistance. If you're going with a smaller company, not say all, but a lot of smaller companies, or when a loan officer doesn't do high volume, right? His comp plan is high. Sometimes when you're doing down payment assistance with them, they have to charge you 1.75 to 2% to make their money, right? But be careful. I've seen people. I'm like, look at your fees. Your fees are so high because origination is 2%. It might be better that you go with a loan with a down payment. Well, I don't want to do that. Then have the lender reduce the fee or switch it to another lender. Your fees are too high. It's better to go with a down payment if you're going to pay those fees. It's better that you take that money, put it towards your principal, not towards origination. All right, hopefully that helps you out. Staying focused. Can you house hack a VA loan for equity and build portfolio and multiple homes over time? Staying focused. It was me. I would use my VA loan, go buy a fourplex. Once my 4 unit has 25% equity, refinance it into a conventional loan, go out and then buy a duplex. Make sure it's bigger than your fourplex. Live in it till you have 15% equity, refinance the conventional, then go out and buy a condo. Then wait till you have 10% equity or 5%, refinance it, and go out and buy a bigger home with VA. You can keep rinse and repeat, but make sure you have 6 months to move into it, and you got to live. I mean, you have 60 days to move into it, but you got to live in it for at least 1 year before you can rent it out. Hopefully that helps you out. Andrea, hi, Min. I checked my FICO score and my credit card, but a lender just ran my credit and it's significantly lower. Why is that? If it's a free credit report, they use Advantage Score. Vantage scores are like soft pulls, right? They're not hard credit inquiries, okay? When you use a credit card companies use FICO score 8 to run your credit. Same thing with student loans. Car loans use auto FICO score. When you're getting a mortgage, they use FICO score 2, 4, and 5, right? Depending on who you're borrowing money from, they all use a different credit rating system to run your credit, to judge your credit. That's the reason why, Andrea. Hopefully that helps you out. Guys, like I said, thank you for everything. Thank you for everyone who watched, liked, and subscribed. Right? Thank you for everyone who asked questions. We want to end all our live stream with our attitude is gratitude. Without you, there would be no us. And have a great night. Again, thank you so much for watching our show. If you have any challenges or concerns regarding what's a mortgage, call me 714-332-2526.